Hello and welcome to the Learning Crypto YouTube channel. In last week's video, I discussed some potential retracement areas for Bitcoin and Ethereum. And in this video, I'm going to be talking about some potential retracement areas that we could see in some of the top altcoins that we've currently got in the market. Those being ADA, BNB, DOT, NEAR, and ROSE. And I'll also show you how to use the Fibonacci tool so you can identify these areas for yourself. So a very quick recap on what I went over on Friday for those who haven't seen it, and I've also added another level onto both charts as well. So for those that did see Friday's video, I've got a little bit more extra context for you. So basically, as you can see, these levels are already strong levels of support and resistance in the past, and we've got added confidence if we use the Fibonacci tool. So basically start from the lows of January that you can see there down at 38k, take it up to the all-time highs, and you can see that the 236 lines up quite nicely with the 65.5k level. The 382 lines up quite nicely with the 60.5k level, or call it 60k, and then the 618 lines up very nicely with about 52k, as you can see there. So nice confidence with those. And also if we extend the fib out all the way from the lows, cycle lows of 15k all the way up to the new all-time highs, so you can see the 236 still lines up quite nicely with 60.5k, and the 382 still lines up quite nicely with 52k. So nice confluence there. Those are some potential levels of retracement. As I said in Friday's video, the 236 being at 65.5k would be like a shallow pullback, and we actually bounced off that last week. A deeper pullback, so a weekly close below that, and we're probably looking at 60.5k or 60k in and around that area. And again, a weekly close below that, and we may see an even deeper pullback all the way down to 52k, which I know seems crazy at the moment, but we have had big pullbacks in the past. And in fact, if we just take a quick look at what that would be percentage wise, so down to 65, which we've already seen was about 10%. Down to 60k would be just shy of 20% at about 17%. And then down to 52k would actually be that magical 30% pullback that we have seen multiple times in bull markets, as I went through in last Friday's video. So definitely not out of the question, definitely within the realms of possibility. We could see 52k. If we move on to Ethereum, very similar. If we just grab our Fibonacci tool and go from the October lows back up to the highs, you can see we narrowly just missed the level of resistance at 4126, which was the swing high of December 2021. As you see, the levels don't quite line up as neatly with the fib, but good enough. The 236 more or less being at 355 or 3550, as you can see, which we're currently sat on at the moment. The 382 lining up with just over 3k, and the 618 lining up with 2500, which was of course that big level of support all through 2022 and a big level of resistance in January of this year. So again, if we just take a look at percentages from the top down to where we are at the moment, this first level of support 13%, down to the next level at 3k is about 25%, and it would be a 40% pullback on ETH if we were to get down to 2500. Again, not outside the realms of possibility, but yeah, we'll just have to see how it goes. As I say, these aren't predictions, these are more just putting them in your mind just to think of the possibilities. We could go lower, and if we do, then they should be seen as opportunities for you to capitalize on. Always have some dry powder set aside ready to jump on any opportunities that come your way. So that's BTC and ETH summed up. Let's get on to the altcoins. So as you can see, I've completely cleaned my charts out, and I'm just going to focus on the Fibonacci tool today. On each one, I've got what you can see there is an important level tool, which I believe is a very significant level that we should not be trading below. And if we do, that's when I'd start to get worried. Anything above that, then I think is a great opportunity to buy the dip. Of course, not financial advice. So if we just take a look at the run we had from October to December last year and grab our fib tool, you can see that ADA retraced down to the 0.5, found support, which is also that 44.5 cents level that I've marked as important to hold, and had a bounce. So if we then take the fib down to the start of that leg of the move, which is at 44.5 cents, take it up to the current highs, and you can see the potential retracement areas we've got. You see we had that spike all the way down to 55 cents, which was just above the 786. But these are levels that I think would be really good buy areas on the way down. I'm talking about, dollar cost average, investing long-term swing play, where you're not worrying about stop loss, you're not using leverage, just spot play. And you can see we've got 63 cents here at the 0.5. We've got the 618 here at just below 60 cents at about 58, 59 cents, and the 786 coming in about 53 cents. If you bear in mind that we are currently on the 382 and we've come down about 17% already from the highs. I think even now is a pretty good area to start or to carry on dollar cost averaging in, particularly if you were getting FOMO when it was up here at 80 cents. So anything you were feeling FOMO on at the highs of a couple of weeks ago, we've had a nice big retracement. We could still go further. Probably worth looking at adding to your bags if you're not satisfied with the size of them. So that looks pretty good for me for ADA all the way down to about 52 cents. As I say, important level to hold at 44 cents. I would not like to see us trading below that. You can see it was a clear level of support and resistance in the past, big breakout level. Price has no business going back below there if we're still in a bullish environment. Move on to BNB then, which has been a monster of a trade over the past couple of weeks. So if we just take a quick look at what it did from the October lows, where we rallied from 202 up to about 350, you can see a very shallow pullback. We hit the 382 on the nose and then rallied from there. So if we then take a look at the fib from that low that we had in January, so about 287, all the way up to the most recent highs at about 650. You can see we're currently on the 236. The 382 comes in at about 515. The 0.5 comes in at about 467. And then my important level to hold is this one here at 445, just above the 618. Sure, we can have a wick down to the 618, that's fine, but I would not want to see a weekly candle close below 445. You can see it was a big level of resistance back here in 2022. And again, bit of a breakout level. As you can see, price really expanded very quickly once we got over it. Price, as I say, doesn't really have any business going back below there if we're still in a bullish environment. So quick tap of the 618 is fine, but won't want to see a weekly close back below it. So that's BNB. If we take a look at DOT, again, let's go from the October lows and see what kind of retracement it did in the beginning of the year. So you can see almost tapped the 618 on the nose, just above or just below, in fact, $6, and then off it went. So again, let's take a look at what it looks like from those lows back in January. So from about $6 up to the most recent highs here at about just shy of $12. You can see we're currently bounced off the 382 here at $9.66. At the 0.5, it's around $9. The 618 comes in about $8.24. And then again, my important level to hold is just above the 786, about $7.41. Again, you can see why. Clear level of resistance in the past. And as you can see, we've already had a little deviation and break back above. Really wouldn't want to see price getting back below there. No business doing so. And of course, getting below the 786 doesn't leave any fib retracement areas left. And you don't really want to see price getting below this $6.60 area where it's such a heavy level of support. I think that would be a big red flag. So as long as we're above $7.30, I think any retracement between here and there, it looks pretty good. If we just take a look at what kind of retracement we've already had, we're already 16% off the high. So again, if you were FOMOing in or wanting to FOMO in at $11, $12, below $10, which we currently are, looks a lot better, and you can start dollar cost averaging into those fib retracement areas. Let's move on to NEAR then. And once again, let's take a look at what NEAR did from the October lows. So from the October lows to the December highs, you can see it retraced again, similar to DOT, almost on the nose of the 618 at about $2.45 and rallied from there. If we then take a look at what the current fib retracement is giving us, so if we go from those lows of January up to the most recent highs, we're currently on the 236, which is around $7.46. The 382 comes in at about $6.50. The 0.5 comes in about $5.72. Lines up quite nicely with these weekly highs here. And the 618 comes in at just under $5, about $4.95. And again, lines up with these candle closes here. Again, 786 is the $3.85 area, and that's my important level to hold. Wouldn't want to see a close below the 786. Wouldn't want to see a close below this significant level of support and resistance. So that for me would be a big red flag if we would get below there, but I don't think we will personally. Again, if you were FOMOing in at above sort of $9 or at $9, I should say, we are currently 18% from the highs, so definitely a good area to be buying as opposed to at $9. You've got these additional fib retracement areas to add to your bags as well if we were to go further, if BTC and ETH continue to show weakness and drop to their respective levels. And then finally, let's take a look at Rose. Starting again with the run we got in October up to those January highs, and you can see sort of stopped in between the 0.5 and the 618. We didn't get a weekly close below the 0.5, so hit the 0.5 and rallied upwards. We then take our fib from that point, this most recent leg, up to the most recent highs, and you can see we're currently on the or just below the 382, which comes in at about 14.8 cents. 0.5 lines up with these weekly candle closes here at about 13.5 cents. The 618 lines up with these candle body closes here as well at about 12.5 cents. And once again, the 786 is my important level to hold. Don't want to see a weekly candle close below the 786, giving up too much ground. And again, a pretty significant level of support and resistance in the past. We've already had that deviation below it and back above it. We really don't need to see price get back below there again. It doesn't really have any business getting there if we're still in a bullish environment, as I've said before. So what you can see with each of these pairs is each of them hit different levels on the fib retracement before finding support and rallying upwards. So it's not just a simple case of using a Fibonacci and then going, right, I'm just going to buy the 618 every time. Sometimes, especially in a bullish environment, you're not going to get that retracement all the way down to the 618. As we saw, the BNB only hit the 382 and then continue to rally, whereas others hit the 0.5 and the 618. So as I say, a nice, easy, stress-free strategy in a bull market is to buy these fib retracement levels. You don't know which one is going to be the one that it hits and then flies off again. So dollar cost averaging in at each level with the understanding that it's more than likely going to rally higher than continue to drop. As I say, doing that in a bull market as opposed to a bear market, and it should be very profitable indeed. So have patience. As I say, Bitcoin and Ethereum, it could go much lower. It should be seen as an opportunity to increase your bags and therefore increase your profit in the long term. So let us know in the comments what bags you're looking to fill up, what levels you're looking to buy them, and what your strategy is when it comes to dollar cost averaging it in. Also, don't forget to check out our sponsors at Blowfin Exchange, who are offering 500 USDT cashback straight back to your account, but only if you use our link in the description below. Hope you have a good week, and I'll catch you on the next one.